To talk about the E of the ESG here, you can see investing in natural resources is the topic of our panel, power panel here, as it were. So we're going to have you take a little bit of a break since you've been talking for the last 10 minutes or so. But getting to the heart of the matter, guys, for Saadia as well as for Tom, driving business value. Basically, we want proof of concept, proof of returns, right? Saadia, let's start with you talking about the finance gap.
So climate change, and it cuts through many of the SDGs that we saw up on the chart earlier today, in our view presents both a real risk but also an opportunity for investors. And what we do at the foundation is we fund the research and development of the most promising financial instruments that we believe can mobilize money to address these issues, so channel it towards programs on the ground that are really making a difference, but at the same time also deliver return and value to companies and to investors along the way as well. And that is across asset classes, across geographies, across different issues as well. And we all talk about the environment and climate change, but there's so many complexities behind it as well. It's everything from the likes of the wildfires that we've seen on the front pages of all of the newspapers, and those that are from California, you know, potentially have experienced the impacts up front, to land getting degraded so that the productivity on those lands isn't what it used to be. So we can't grow the things that we were talking about earlier as well, to more and more economic value being lost because of floods that come in times of hurricanes. So our view is, you know, we need more money. We need so much more money than what the public budgets and what philanthropy has available. What are the ways that we can bring capital markets to the table? Because we can open up where money goes and how it goes while we still deliver the returns that investors look for, but can also catalyze positive growth and momentum behind the programs that are looking to make a difference.
What would you say is the biggest success so far?
So I have an innovation portfolio. And with innovation portfolio, one, you have to be really creative. Two, you have to be patient at the same time as well. So you go out and you look for the most promising ideas, but from the time you actually have it on a piece of paper to something that's up and live and delivering the results, and particularly in this case, you have to have results not just on the financial side, but on the environmental or the social side as well. So it's always a tricky question to be asked in terms of what are the most promising ones, but I'll mention a couple that have been launched this year where I think it'll be really interesting to see what the development looks like. One is called a Forest Resilience Bond. So it's basically focused on the wildfire situation that I mentioned earlier in California. What it does is recognizes that the U.S. Forest Service does not have the budget available to go in and undertake a lot of the restoration activities that are much needed in the forest because we haven't maintained the health and they're severely overgrown. It raises the money from private investors. Working with the U.S. Forest Service would get the restoration work done. What the repayment to investors then not just comes from the U.S. Forest Service, but it actually comes from the utilities that are in the area that benefit from having an improved water yield and quality as well. So it's a creative way of going in and saying we have a massive funding gap, we don't know how to address it, but at the same time we also know that the utilities, and these are like billion-dollar blazes that are happening year after year and having real bottom line impact on those utilities. How do we bring them to the table so that they can benefit from it as well? And business value, I mean, we talk about it as well. If you look at the bills that the insurance companies are, you know, that are piling up on their desks because of these fires, that is, you know, huge as well. So can you bring them to the table as the investors in something that may have a bottom line impact for them further down the road? Another one, just at a high level, I'll mention is something called the Reef Insurance that launched earlier this year as well. So few people may know that natural infrastructure like coral reefs have a massive economic value to the coastal regions because they act as a protective barrier. And in certain cases, even better than what man-made gray infrastructure may be able to do in terms of seawalls. I mean, it can absorb up to 97% of the energy of a wave that's coming in. Now, we haven't taken care of the natural infrastructure that we have. If anything, we've probably done things that would degrade it even further. So in this case, the idea was, can we take something like a coral reef, understand what the economic value of that reef is, and help monetize it? And that led to something that's called a reef insurance product that's currently being piloted in Mexico, so on the Mesoamerican reef. Which is
It's so interesting, too. I read that this is actually maybe the first time a natural occurring structure has been insured by man. Usually it's buildings that we make, right? And this is off of the Mesoamerican reef there. The other one about the forest fire bond, that's, it's just interesting because you think, how do you even do that? But you got $4 million for that.
right. Yes, of investment capital for the first pilot.
Yeah. Bringing in business partners is something you said, and I want to bring in Tom on this. With Walmart and the Gigaton project, I think a lot of folks may know about this, but when you think of Walmart, you think of, oh, big business equals bad, but not necessarily.
Sure. Well, we think about it differently. We think big business equals scale, and that scale could be used for good. Yeah, certainly when I talk to people about environmental success stories that are creating incredible business value, I point to Bentonville, Arkansas. And, you know, a decade ago or 12 years ago when I took my first trip there, that was a bit of a surprise. I think that story has changed in most people's eyes. I see Walmart every day using their size to have a pretty good impact on the environment in a range of areas: climate and energy, sustainable agriculture, chemicals in the everyday household products that we use every day, deforestation, and a number of other areas. Project Gigaton, I think, is a particularly inspiring effort that's going on right now, launched in November 2016, actually the same week as our presidential election. A huge step from the business community saying we're moving forward on climate change. So Project Gigaton is an effort led by Walmart to reduce 1 billion tons of greenhouse gas emissions from the global supply chain by 2030. 1 billion tons is the equivalent to the annual emissions of Germany. So we're talking about a lot of tons. It's part of the Walmart science-based target. They have a Scope 1 and 2 target as well, and this is how they're dealing with Scope 3 emissions. And it represents kind of, just like the rest of climate change, that even Walmart can't do this alone. So it's a call to action across their suppliers. So far they have 400 suppliers from 30 countries that have made commitments to be part of this project. Cumulatively so far, they've reduced about 20 million metric tons, so we still have a ways to go. Again, it's a 15-year goal. And these are efforts that are reducing emissions and improving energy from factories to fleets to farms to forests. You know, it's something we're working hard on. I think has incredible potential and is a great model for how you can drive change through the supply chain.
Thank you. Christine, I want to bring you back in now. On our prep call, we were chatting also about returns. I know no one here wants to talk about specific returns, but in terms of quantifying, to really drive home the point that this really is something that's, that has returns and is profitable in some way, to what degree can you couch this so that people say, oh, hey, this really is working?
Yeah, I think one of the great things about our business model is we take a cut of every transaction, and so since day one, we've been able to make revenue off of our sales, and we're not doing anything that you know, a distributor wouldn't be doing in terms of buying and selling product. We're just doing it in a much more innovative way with technology and driving significantly more value throughout the supply chain, so that, to what I alluded to earlier, farms are able to capitalize on more incremental revenue and profit, and buyers are able to save money from that. So really, it's inherently ingrained in our whole business model to drive more economic value.
I want you all to break some news. I already told you to prep something on this. Being a journalist myself, I want to know what the new thing is, because we've just talked about the things that are already out there. So Saadia, I want you to go ahead and chime in on this first.
So again, when you have an innovation portfolio, almost everything seems to be new. I think one of the things, and it was, Vijay was talking about it in the opening panel about how ESG is broadly accepted and it's been around for a long time. But if you go back to a lot of the conversation that happens in the hardcore development philanthropic space around impact, right? That was discussed earlier as well. And how do you really measure impact, and how do you have the validity behind it? It's particularly hard to do in the public equities market because there's a lot of discussion and conversation around can you really deliver hardcore impact the way you can do it in a private equity or if you're investing directly in small businesses or something else. I think one of the interesting things that we're seeing is more nonprofits that are actually coming in and working with the large companies to, one, set the standards for what impact is and should be, but two, having much more of an activist role in terms of shaping what that change in the large companies could be along the way as well, which is a different thing than what we've seen in the early days of ESGs.
All right. Google is something that you guys have just recently announced. Actually, Bloomberg also did a little bit of a story on that. Tell us more about this and about gases headed up to the air.
Sure. So you guys covered this last week, and I appreciate that. An area that's new and incredibly exciting for EDF is something we're calling the fourth wave of environmental innovation. I know you need to know the first three waves if you're going to catch up on the fourth wave. So at EDF, we think there's already been three waves of environmental innovation or progress. One was the conservation movement. Two was when we put our environmental laws in place, the Clean Air Act, the Clean Water Act. And then third was in the 1990s under the George Herbert Walker Bush administration when we started using markets and corporate partnerships and the power of those to make environmental progress, like our acid rain training program. So the fourth wave is the moment we think we're in now. We think this is a moment where technology, the same technology that is changing the way we live and the way folks run their business, IoT, predictive analytics, sensors, and satellites, has the potential to revolutionize the way we do environmental advocacy. Should increase people's access to data and our ability to turn that data into action. That's what our partnership with Google is all about. An area that EDF is particularly focused on, have been for the last 6 or 8 years, is methane emissions from the oil and gas industry. As we learn more about the science there, as we scale up oil and gas production in the US, we've learned that the system is leaky. And because of the chemistry, small leaks of methane can quickly erode the climate benefits of natural gas. So here's what we're trying to do is make it faster, easier, and cheaper to find and fix those leaks. One of the ways we're doing that is a partnership with Google, where we're using their Google Earth mapping vehicles, equipping those with methane sensors, driving them around about a dozen cities, mapping those cities for methane leaks. We may have an example of that.
Let me just bring this up here. I'm just going to scroll through. Here we are. Yeah.
This is
one?
Boston. So in an older city like Boston, you'll see a lot of leaks. We're doing this in partnership with utilities. The red and the oranges are useful because it can help the utilities prioritize where the biggest leaks are. We also can make the information available to elected officials, community groups that are interested in cleaning up their neighborhoods. We're doing the same thing with Google for air quality as well. Using the same cars, we're doing that in Oakland, we're doing it in Houston, we're doing it in London. The idea is if we can make air quality, air pollution, personal and local, can we unlock some of the hard solutions to those problems that we haven't been able to tap into before. And probably, Ramy, the really big news is that we have a partnership with Smithsonian and Google and Harvard to launch the first purpose-built methane satellite by 2021. This is kind of a big deal for an environmental NGO. But the idea would be a real-time satellite mapping methane emissions from the oil and gas industry, from landfills, from animal agriculture, improving our ability to hold sources accountable, empowering companies with information about where leaks are happening in their supply chain, and hopefully empowering policymakers to set good policy to limit global methane emissions.
Very reliant on technology for sure. Christine, bringing you in here and looking ahead, to what degree can technology, or are you looking at technology to try to make things even more efficient on your side for full harvest?
Sure. I inherently believe that technology is the only way to solve this problem at scale. And that's why we're one of the first to bring technology to the supply chain. And it's because there's just such disparate supply and trying to aggregate that in an efficient way. And I think at scale, the power is huge. We're going to become much more of a data powerhouse where we will have data that no one else has in terms of how much is going to waste actually per commodity at different farms. You know, what is the price that people are willing to pay for some of these number 2 or off-grade produce items. And then with that, our logistics and supply chain will get a lot more efficient, being able to trace product for food safety and be able to geolocate in a way that makes it more efficient. And eventually, we'd like to be able to use that technology for even further good of being able to potentially have certain distribution go to food deserts and that sort of thing. So I think at scale, there's massive potential from the technology.
Potential there, but that also requires patience. And for all of our panelists here, to what degree are people, are investors willing to be patient to see a return? You know, sometimes everyone wants to get something just as fast as possible, but we're talking on the order of not just a couple months, no day trading, of course, but something on the order of years. Christine, if I could stick with you very quickly, what kind of time frame, time horizon are you saying, hey guys, stick with us?
Yeah, we've been very picky with our investors in terms of people that really understand what we're building, or have worked with old school industries, or really believe in our mission. You know, we're not trying to flip this company in a couple of years. Really highly disruptive companies take anywhere from 5 to 10 years, and so finding the right partners that understand that. But some of the largest businesses that have been created are the highly disruptive ones that have taken 7 to 10 years. So and they're multi-billion-dollar companies. So. That's really, what we're trying to make sure that we manage expectations on, with the plan that we are planning to be a very large business. So.
Saadia, let me bring
So the investment side, I mean, when you go to investors, they ask for track record, and track record, right? And it's hard when you're trying to come up with something new, and even when you have one pilot, right? And you're talking about the time horizon, where you say, listen, we've tried it out, it works here. There's like, well, it wasn't big enough, and you haven't tried it in enough places, and there isn't consistency in the returns either, so go back. So it's hard to put a number of years on it, but I think there is an interesting example in the growth of green bonds. I mean, that market, from the time it started in 2008, 2007, to now, it's been 10 years, and the growth has been tremendous, right? And there are other examples out there as well. So particularly when it comes to the environment and climate change, because of how dire the situation is, I really hope that it doesn't take 10 years for each one of them to get to the level that green bonds has gotten to now. But I think somewhere in there, you'll probably find the answer.
For me, it's a range. A lot of our work is directly with companies, and in that work, I am encouraging them to make investments in environmental projects, climate, clean energy projects. There, the returns are great, and they're quick. We see this every summer in our EDF Climate Corps program, a program we've been running for about a decade now, placing clean energy fellows in large global companies. This summer, anybody from BlackRock to BYD, the electric bus company, and Kickstarter. But we're also working at the other end on longer time horizon infrastructure projects, where we want to see deployment of electrification of vehicles and those kinds of things. And that's a massive long-term public-private investment, and we're going to need investors who are in it for the long term.
Pushing along to the current political climate of the day right now, of the past few years, as it were. Tom, we were talking about this, and I know you're happy to jump into this. How do you maneuver? How do you figure out a way to make sure that what your business is actually going to be stable in the long term under what's happening now? There have been difficulties and challenges over the past 2 years, ever since 2016, but there are still many successes.
Sure. Well, listen, I think that's one of the biggest challenges with this administration's position on environment and climate change and clean energy, right? It's inserting a whole bunch of uncertainty and instability into an equation when businesses don't thrive in that situation. It's certainly it created a big setback in our work. I agree with your point that technology is going to be part of this, but actually we need policy change to enable massive innovation and investment in that technology. Yeah. And we're at we've seen a setback in that over the last couple of years. This week, as we're all remembering George Herbert Walker Bush and his legacy, I think it's important to remember that he has an incredible environmental legacy and point to a time where progress on clean air, on climate change was not partisan the way it is now. In '92, his administration helped put us in the UNFCCC. He led the way on the Clean Air Act amendments of the 1990s, and his administration is the one that put the acid rain trading program in place in the U.S. Used a market-based approach to clean up. We don't talk about acid rain anymore. Why? Because we've cleaned up 88% of our sulfur dioxide pollution in this country, and we used a market, so we did it at a fraction of the cost that people thought it would. We need to get back to that kind of conversation. I'm optimistic. I'm optimistic that there have been 2 climate bills introduced in the last 2 or 3 months. One a Republican bill, the last one last week, a bipartisan bill. And I'm hopeful that we'll see the beginning of a a drumbeat and a more real conversation about climate action in Washington over the next 90 days or so as the new Congress comes into play.
Christine, being based on the West Coast, what do you hear in terms of trying to navigate the current politics of the time as well? Because we know where that leans also on the West Coast.
Yeah, it's challenging for sure, and some people get discouraged, but I think, you know, the private sector and the innovation and the entrepreneurs are the ones that are going to, you know, be the ones that can really drive the change for now, and I think that there's a lot of that happening, which is exciting to see. It hasn't really slowed the passion and the interest on still trying to control what we can control and disrupt and innovate on some of these issues.
Great. We just have several minutes right now for questions. I think we can go ahead and go into that. So everyone make sure that if you want to ask a question, go into the app and to send those along. Lauren.
First question for Christine. Why were the farmers not harvesting more of their crops before, or why were they throwing away more of them?
So to add to some of what I discussed, I would say that they didn't have a very easy outlet, and it's all about incentive. So, you know, they would have to spend hours over the phone manually calling around trying to move product when they have very low resources and not a lot of time to move that product, and they're more focused on what they can sell quickly to the big retailers that will pay a lot more for it, for the perfect looking produce. So it was purely due to the fact of not having an easy outlet that incentivized them to quickly be able to offload that product. And that's what technology can do.
As a company that's trying to both grow your margins and also do something that's good for the world, how do you navigate the fine line between green marketing, how much you're talking about your sustainability efforts versus it feeling almost like greenwashing or being too much?
So what's great about the business is that inherently we are doing good for both the supply and the demand side, and we found that that messaging is really what attracts both sides. And so I started this business focused on what will incentivize each side to change their habits, and so we do pitch to buyers on the cost savings, and then we also mention the sustainability brand story that we can help them with, but at the end of the day, they are businesses, and so we focus a lot of the messaging on the underlying value we can bring to them. Same thing with farms. They desperately need additional revenue right now, so that's what we focus on, and people understand that it's ingrained in what we do, but we're really prioritizing the messaging of the business value that we can bring to them.
Tom, what are other specific areas where technology can help solve environmental issues that businesses are facing?
Well, similar to Christine, I mean, we're seeing a lot in the sustainable ag space, working with companies like Land O'Lakes, Sustain, Indigo Ag, My Farms to develop new tools for farmers to differentiate. If they're growing a superior product using better soil health and fertilizer management practices, we want the market to reflect that and incent them to do that. Another place where we're using similar technology, what I talked about with Google, is on fishing boats. We have a pilot in the Pacific Northwest that we're calling smart boats, but using low Earth orbit satellite and real-time cameras and sensors with an AI overlay over it to replace human monitors on boats with technology to measure and monitor what's being caught, where it's being caught, when it's being caught, what's being caught that shouldn't, and feed that real-time to fisheries managers and supply chains. So those are a couple examples of where we're looking at technology.
For Saadia or for Tom, you may want to weigh in on this too. Will the groundswell of interest from investors and grassroots activism be a catalyst for legislative change or vice versa?
Want me to take that? In the last administration, we know that investor voices were incredibly critical to the Obama administration on a range of things they were trying to do. Fuel economy standards for trucks, methane emissions from the oil and gas industry and for Bureau of Public Land, and I think that could be the same. In fact, you know, a takeaway for the folks in this room from me is we are still a couple years away from putting a price and limit on carbon in the U.S., but these next 2 years I think are absolutely critical to build momentum. And I'd ask all of you to think about that and how you can lend your voices to build the support and change. It is really an economic issue, an environmental issue, not a political one. This is how we put the country on a path and unlock big opportunities for investment.
I think one thing to keep in mind here is also when it comes to the environment and climate, it's not confined to geographic boundaries, right? And if there is a lot more happening in other parts of the world, and Europe would be a prime example of that, both on the policy side, but also in terms of the investor momentum behind solutions and asking for more clarity and progressive policies in place, that does spill over. Because just like the problem isn't confined to geographic boundaries, neither are the companies that operate within these markets.
Two more logistical questions for Christine about how your business works. What agricultural product is the best revenue driver for your business? And are you working with both organic and non-organic farms?
We primarily are working with over 70% organic farms, and that's mostly driven by the demand. As I mentioned, there's more than twice the demand for organics as there is supply. And I think one of the things I'm excited about is that we're able to more or less offer ugly organic products at the same cost as beautiful conventional. And I think that's really exciting to create healthier and healthier products and help these companies transition to organic that might not have been able to afford to before. What I can say as far as our biggest revenue driver is that it's really where we're doing the most innovation at the field level. So some of the pictures that you saw, it's where we're truly capturing product that previously didn't have a market. There wasn't a lot of number two in terms of imperfect leafy greens and root vegetables and those kind of things, which is where some of the demand is growing for food products. So we're really excited about the innovation that we're continuing to do at the farm level to keep capturing more and more products that previously didn't really have an outlet.
Saadia, for you, where do you think the biggest opportunities are for investors in integrating SDGs?
So I think climate is the one where there are the most opportunities out there, and I think it's a reflection of a couple of things. It's a reflection of the fact that the data has been available to understand what it means for the bottom line of companies out there, what it means for investments, and hence there's much more that has happened in that space. And today, if you look for opportunities to make investments, whether that's in fixed income or it's in private equity or other places as well, that's probably the place where you'd find the ones with the biggest dollar amounts attached to it as well, and the greatest track record.
Tom, one of our questioners is asking if the methane data sets from the Google Map images are available to the public.
They are. They're on our website. And the Methane Sat project that I mentioned, which is a couple years away, those will be publicly available data as well.
Great. I think we have just one more minute left, and I want to ask the last question. Of each of you, as our audience members leave today, what is one real action point that you want to really implant in their heads that they should remember, take away, act out on? Christine?
So one stat I think is really powerful is the Reef report that came out a year ago. Talks about the statistics around food waste, and they quote that $10 billion of investment into food waste will bring $100 billion of value to society. And I think it's really important to remember that you guys are, as the investors, are some of the ways that can really drive this change that will benefit society, the economy, and attract more and more entrepreneurs solving some of these big problems that really can, become big businesses while helping the whole world and environment and economy. So the time is now, as we all know, with climate change, and so I really would ask that you guys really consider strongly investing more into the space.
Right, returns to be had.
Yeah.
Saadia.
So I started off by talking about how climate change is a challenge as well as an opportunity. I really do believe that there is an opportunity, both in terms of for investors to better manage the risks that they're facing, but also for them to look for yield in markets that they perhaps haven't entered in the past. And everybody talks about risk and saying the risk is too high. At the end of the day, the way I see it, investors are in the business of buying risk. It's a question of how you understand that risk and how you package it up and serve it to the market. So I would end on the note that says, yes, there's a massive challenge that we're all trying to address, but from an investment community, there's also a great opportunity to go in and do what you do on a daily basis, but at the same time also make a difference.
I'll just double down on the opportunity. I think solving climate change is the biggest economic opportunity of our time, and a good example for folks to check out that I'm excited about is a new report called Powering Ohio. It's a collaboration between J.P. Morgan, Walmart, Whirlpool, Owens Corning, Case Western University, a number of other players in Ohio that creates a roadmap and vision for how you could create 20,000 plus jobs and attract $25 billion of investment to Ohio, investing in education, in infrastructure, in manufacturing, in electrification. It's a really powerful report. It's an interesting coalition of people coming together, and it paints a vision of how you really unlock opportunity by heading that state in the right direction.
Great. Thank you very much, Tom, Saadia, as well as Christine. Thank you for that. The E of ESG, guys. Thank you very much.